Hey guys, welcome back to the channel. I'm Phil, I'm a PhD student in neuroimmunology, and I'm building this channel to share my experiences building ideas into small businesses and generating new income sources. One very important part of this plan is to invest the money that comes in as good as possible to leverage both my time and effort, and because it's much more fun than seeing its purchasing power decrease on a boring bank, which are disintegrating themselves anyways as we speak, as this chart of the pan-European banks including Switzerland, the EU and the UK shows, which are ready to take out their all-time lows from 1987. Unfortunately, I've not been fast enough to do this video. Meanwhile, the price of Bitcoin has shot up over 20k, but that doesn't matter because we've got so much further to go. I will try not to swing around big words like it's the hardest of money there is or that it is digital gold. I will try to tell you exactly what convinces me to invest over 25% of what I own into this single asset, or as Raoul Pal from Real Vision calls this position in Bitcoin, being irresponsibly long. Don't you think it's super interesting that even though the price of Bitcoin reached its all-time high, or in other words, demand for this digital asset is as high as it ever was, somehow this doesn't seem to be driven by you and your friends looking into buying Bitcoin? Might it be the big institutional investors? I would think so. If we look at Google Trends, nothing is happening. The Bitcoin price has surpassed its all-time high, though all of this is happening without 2017's mainstream Bitcoin mania. That's a public interest corresponding to October 22nd, 2017. The price increase, followed by FOMO or fear of missing out, of the public is yet to come. They still think Bitcoin is over since 2017. FOMO plus the supply shortage following the halving will be a beast. But let's get into the fundamentals of why all of this makes so much sense. People have always been interested in investing in gold because of its scarcity and the long history of people attributing value to it. Bitcoin doesn't have a 100-year-long track record, but that shouldn't put anybody off analyzing the quality of an asset, because Bitcoin is certainly more scarce than gold. It's easier to explain this by explaining what makes gold scarce. Namely, there won't be infinite amounts of gold on this planet, that's for sure, even though we can't say how much there is left to mine, and people like Tyler Winklevoss are speculating we will be mining gold from asteroids in the future, but let's not factor that into our analysis. Whatever is left in the Earth's crust needs to be mined, which costs a lot of money and energy, only slowly increasing the amount of gold that is available for purchase. So I know that this gold coin is scarce today and will also be scarce in a year. For this video, I researched that each year 1 to 2% from the mined gold pool is mined and added to the circulation. Now, Bitcoin is the same in many ways, with one striking advantage. Imagine that the company mining the gold is a powerful computer, and the task of getting the gold out of the earth is computing mathematical problems. The reward for the mining company is the gold nugget. The reward for the person running the computer is Bitcoin. But as a Bitcoin owner, we know exactly which amount of Bitcoin will ever be in existence, namely 21 million. And we know exactly how many Bitcoins enter the market each year. Namely, in 2019, 608,000 Bitcoins were added to the market. Why am I specifying 2019? Now, this is one of the most interesting features of this asset. Let's talk about oranges instead of Bitcoin to make this a little bit more approachable and silly. In your city, there is a monthly demand for oranges. Let's say 100 per month. They are depicted here as available for sale. There is a net demand for oranges per month, and of course each month new oranges are delivered to your city. Now, every 4 years, half of the orange trees disappear magically. An event called the halving. So we lose half of the oranges that are delivered each month. Net demand stays the same, of course, because we all want our freshly squeezed orange juice in the morning. Slowly, a supply shortage starts to accumulate as more oranges leave the available for sale pool, as new oranges are growing, because remember, half of the orange trees are gone. Net demand is moving twice as many oranges out of the circulation compared to what is added each week, decreasing the pool of circulating oranges. As buyers bid for a significantly reduced number of oranges for sale, prices go up. That's basic economics, price versus demand. So people who have been storing their oranges start to sell some. because they are stimulated by the increasing prices. Okay, now we have to stop this mediocre analogy because normally the population does not follow the price of a fruit via their online brokers. Well, they do in case of Apple, but anyways. Bitcoin climbing to new all-time highs might even convince Peter Schiff to consider that Bitcoin is not dead anyways, as it has been concluded by various serious media outlets over the past almost 13 years. When is this going to stop? Enthusiasm grows, mania is triggered by higher and higher Bitcoin prices, and more people want to get in than long-term investors, who are called hodlers, are willing to sell, accelerating price growth. The slow accumulation of this supply shortage drives a bull market in the ensuing 18 months. How scarce is Bitcoin? Well, let's put it this way. There isn't even one Bitcoin for every millionaire in this world. If 21 million Bitcoin would be distributed, every millionaire would get only 0.85. That's how scarce Bitcoin is. And now you can reevaluate your own position. This phenomenon gets amplified, of course, the more people believe that these oranges, Bitcoin, are in fact here to stay and want to own them because they think it's great for their health or wallet. The risk with an asset like Bitcoin lies in the fact that it does not produce revenue or pay a dividend, something Warren Buffett has always hated about gold. However, this year, Warren Buffett actually for the first time started buying Barrick Gold, a gold mining company, because it generates revenue. But guess what its revenue depends on? The spot price of gold. So frankly, he exposed his portfolio to the price of gold. Bitcoin has been the best investment for the past 12 years. It was created after the great financial crisis in 2008, but of course past performance isn't deterministic for future returns. That's the thing with assets that are potentially the big bets of your investment career, the ones that drive the majority of the return of your portfolio. Or as Morgan Housel wrote in The Psychology of Money, one second. Some tail-driven industries are obvious. Take venture capital. If a VC makes 50 investments, they likely expect half of them to fail, 10 to do pretty well, and 1 or 2 to be bonanzas that drive 100% of the fund's returns. Investment firm Correlation Ventures once crunched the numbers. Out of more than 21,000 venture financings from 2004 to 2014, 65% lost money, 2.5% of investments made 10x to 20x, 1% made more than 20x return. 0.5%, about 100 companies out of 21,000, earned 50x or more. That's where the majority of the industry's return come from. You need a considerable amount of risk for an asset to carry a high possible reward. It doesn't work without that. This is why macroeconomists like Raoul Pal, CEO of Real Vision, are super bullish on Bitcoin, labeling this chart as the world's best chart before Bitcoin even broke out of this triangle. By the way, Real Vision is one of the most respected macroeconomic platforms out there and just launched Real Vision Crypto to the world, entirely free, so go check it out to educate yourself. Or Paul Tudor Jones, who calls Bitcoin the fastest horse in this environment, or longtime Bitcoin investor Anthony Pompliano saying that the money printing and unlimited QE by central banks act as rocket fuel in an already favorable environment for a digital asset like Bitcoin. Or just recently, billionaire investor Stanley Druckenmiller has revealed that he owns Bitcoin, calling it an asset class that has a lot of attraction as a store of value and could be better than gold. Or one of the world's most respected historians, Neil Ferguson, and monetary experts calling for Bitcoin's eventual adoption. In addition to this, Square and recently PayPal have added the possibility to buy and sell Bitcoin over their app, thereby facilitating the adoption of owning cryptocurrencies like Bitcoin and adding more conviction to this relatively new asset class. Companies like MicroStrategy and also Square, which is led by Jack Dorsey, who also endorses Bitcoin's potential, have added Bitcoin in exchange for millions of US dollars to the balance sheet of their publicly traded companies. And just recently, a leaked report from Wall Street giant Citibank has revealed a senior analyst thinks Bitcoin could potentially hit a high of $318,000 by December 2021, calling it 21st century gold. Now I did it. On the other hand, there are of course also famous investors like Ray Dalio who don't endorse Bitcoin. In a tweet he made several remarks that for many people, including myself, would rather indicate that he doesn't fully understand the asset, saying for example that it is too volatile to be a currency. However, Bitcoin isn't a currency by design. Let me read from the Bitcoin Standard, which is an amazing book if you want to get into Bitcoin. Centralized payment solutions such as Visa or MasterCard employs one centralized ledger to which all transactions are committed, as well as a backup that is entirely separate. Visa can process around 3,200 transactions per second, or 100.8 billion transactions per year. Bitcoin's current 1 megabyte blocks are able to process a maximum of 4 transactions per second, which are 350,000 transactions per day, or around 120 million transactions per year. For Bitcoin to process the 100 billion transactions that Visa processes, each block would need to be around 800 megabytes, meaning every 10 minutes, each Bitcoin node would need to add 800 megabytes of data. In a year, each Bitcoin node would add around 42 terabytes of data, or 42,000 gigabytes, to its blockchain. Such a number is completely outside the realm of possible processing power for commercially available computers now or in the foreseeable future. You have to think of it more as a reserve currency, like gold. Central banks, for example, started buying huge amounts of gold because they knew it was going to be a safe store of value in this uncertain economic environment, but not because it was going to act as a great currency. There are more and more products being built in the cryptocurrency space like BlockFi, which offers high interest savings accounts. I have 1/3 of my Bitcoin on their platform. One, because it's amazing. I'm invested into an asset that has far outperformed any other asset that I own by far and yields me 6% interest APY. And 2, because it's safer if you store your Bitcoin on online wallets to have them diversified among different exchanges. I use Coinbase, BlockFi, and an offline wallet for long-term storage. I linked all of them in the description. In an interview with Wall Street legend Jim Cramer, Anthony Pompliano suggested one of the best strategies to convince literally everyone to add Bitcoin to their portfolio, and that is start small. Build a small position, just 1 to 5% in Bitcoin. If it grows 10x, which is expected by many, this position would grow to 10 to 50%, which is significant. If it goes to 0, which is completely ridiculous, you lost nothing, just 1%. So what are you waiting for? Go download Coinbase from the App Store. Go through their quick and easy authentication process, which takes you about 10 minutes, and deposit some money to your account and get some exposure to the best performing asset ever. If you want to maximize your gains and diversify to a second online wallet, download BlockFi and send some coins over there and earn 6% in interest per year. So that's it, guys. I hope you found this video interesting. If you did, don't forget to like and subscribe if you feel like supporting me and the channel. It really helps a lot. Thanks.